I'm not saying that they will disappear. I'm saying that embracing technology, they could stay relevant. And that's what I believe is the challenge for the insurance industry. And that's, by the way, the punchline that we had for Astoria VC1 at the very beginning. We are investing in tech startup to build the next insurance generation. And right now, the discussion that we have around direct distribution or embedded insurance, it's all about embracing technology to stay relevant, but they will stay in the loop only if they embrace technology. This is Florian Graillot from AXA. This is the future of insurance.
This episode is brought to you by Insure National. Insure National, a boutique executive search provider, specializes in sourcing top talent for the insurance industry. They provide specialized talent to a wide range of clients in diverse insurance fields. Insure National specializes in hard-to-fill claims, legal, and underwriting positions across the U.S. for insurers and reinsurers, service and solution providers, and InsurTechs. They work on a contingency or retainer basis and tailor their approach to each client's specific needs. Learn more at insure-national.com.
Florian, thank you so much for joining me. It's good to finally connect with you. I feel like I'm starting so many of these podcasts saying that it's like, I know you through LinkedIn, and I feel like I know you pretty well, or I know your work so well, but we've actually never sat down and spoken yet. So it's good to make this happen.
Yeah, thanks a lot for having me. And I believe that's the magic post-pandemic, to manage this and to have this kind of remote discussion.
Yeah,
we almost know each other through social networks. So happy to say a bit more about what we are doing and have that InsurTech discussion with you today.
Yeah, definitely one of the silver linings from the situation we've been in. I would just ask you kind of a bit of background for people who don't know about you, about Astoria. Give us some of that. What brings you to this point today?
Yeah, so long story short, on my side, I've been investing in tech startup for 15 years now. And I started my career in InsurTech at the very beginning of that world on social networks in 2014. As I joined AXA Ventures, so I was investing in Europe on behalf of AXA. And more recently, 3 years ago, I launched astorya.vc with my partner Jan. And long story short, we raised money from the insurance industry to invest in InsurTech across Europe. And we have a very specific positioning around seed startup, meaning that we are investing very early in technology, enterprise software. But I guess that we will deep dive into this area, which enable us, I believe, anticipate trends on what's happening in insurance.
So I do want to talk about the stage that you get into, because that's quite interesting. I was just having a conversation with David Gritz of InsurTech NY about how this is sort of the gap that exists a lot in the market, is whether funding's easy or hard to come by. Depends on which side of the giving or the receiving end of that you are. But certainly in the pre-seed and seed stages, maybe even through to A, but it depends on the market and what you're doing, I suppose. But it's hard to find that early money. And obviously without that, we never get any of the solutions or new ideas in the market. So you must see quite a bit of activity that the majority of VCs and the market don't even get to have an eye into.
Yeah, definitely. And by the way, that's the beginning of Astoria VC. It started with an analysis of the market and a gap that we spotted on the market at seed stage in InsurTech for one very specific reason. Again, 3 years ago, when we launched Astoria VC, we realized that most of investors investing in InsurTech were either fintech funds, but they are big to do seed fund. Mathematically speaking, they are managing 150, sometimes 200, even sometimes 400 million euros. So you cannot put 1 million or 2 million in a company that doesn't fly. And the other active investor in InsurTech back in 2017 and 2018 were corporate themselves. They all started their corporate VC arm, and they all started investing at seed stage. And then they realized that first, seed investment is not about money.
Yeah.
It's about structuring the company, structuring the product, finding the customer, having the right people on the team. Obviously, money is a means, but that's not enough.
Yeah, it's not the gas on the fire moment where you just need to pour more in.
Yeah, exactly. And so that's the first thing they realized. And the second one is that actually they were not only looking for financial return, but they were interested in having strategic partnership and trying to work with the startup in which they have invested. Hence, they realized that it was easiest for them to partner and then to invest in more mature startup. Long
Yeah.
story short, 3 years after that, that trend is even more important on the market. And if you have a look at the corporate VC, they are now even investing at Series B or Series C in InsurTech. So long story short, there is a gap, and we are investing at seed stage to cover that gap and to enable corporates which have invested in Astoria VC to basically indirectly get a foot into this very early stage ground. And by the way, the InsurTech scene is still in early days compared to fintech or other industries.
Yeah. That's a good point, though. So the mechanism for the corporates to invest historically at that point, they weren't really geared up for it. It didn't suit the corporate mandate of why they set up the VC in the first place. But not supporting at the seed stage also isn't really an option for them. So you're solving the sort of dual-sided issue. And I take fintech, whether they could get in at seed stage or not, as you said, it's not about money. So a fintech investor could be somewhat helpful, but are they going to be as helpful as someone who's really dedicated to the insurance space, which is so critical in the early stage?
Yeah, that's what we believe. And again, if you just take the figures, it was in CB Insight at the end of Q2 2021. That's the latest figures I have in mind. But basically, if you had a look at fintech investment, InsurTech were only 10% of the whole fintech market.
Still,
Long story short, fintech investors by design are spending 10% of their time on insurance-related technology. We are spending, obviously, and by design, 100% of our time on insurance. So I believe it makes a huge difference for our investors, because then we are spending time only on what matters to them. So we are able to better understand the trend, better anticipate the trend, and share that knowledge with them. That's one reason why they are investing with us. And this seed positioning helps us anticipate this trend, because we see way more startups than anybody else. Whenever a founder wants to launch a product or a project in that area, they come to us. So we are lucky enough, I would say, to have built this engine on top of the technology that we have built to make an automated and exhaustive scouting across Europe. But we are pinged by entrepreneurs themselves. They come to us to get tips or knowledge on what we have learned from the European market. Because basically, and again, we've been, Jan and myself, navigating InsurTech in Europe since inception.
Yeah. It's interesting to me when I think some people miss the importance of being sought out, because they feel like I'm already inundated by, if you're at a carrier, I'm already getting all this inbound from all these vendors that I don't have time for, I'm not interested in. So I don't need more of that. But actually, you do want that. You do want to be sought out if you want to find the good opportunities out there, or the right companies to partner with or to invest in, et cetera.
Yeah, and I believe that this challenge that you raise is even more true right now. And the more the industry is maturing, the more corporate needs help to navigate and get clarity on what's happening on the market. Long story short, every day you read huge / crazy rounds in newspapers. And sometimes it's really tough for them to make the difference between what is pure noise and what really matters. The example I have in mind, for instance, is around computer vision for car claim. For instance, there is a huge player in Europe which is already at unicorn stage. But the truth is that if you have a look at the European market as a whole, there is close to 20 players which are sometimes very local. And maybe they are more relevant for you as a corporate than working with the big player. Or maybe you should definitely go to the big player, even if it's not in your local market. So long story short, that's the kind of clarity that they need. And that's challenging, because they have two needs here. First, they need to make sure that they see everything. And then they need to make sure they will focus on 1, 2, or 3 that matters the most. And that's basically what we are providing to our investors. Again, because we tick the first box, we see everything. And then based on our algorithm, obviously our background as well, we are able, I hope, to spot the right player in one space. And basically, that's how we have structured our investment process.
Yeah.
spot everything ahead of everybody, select or build a thesis, and then select the one that we believe is the most accurate slash the cheapest or the most interesting financially speaking.
So does that make your remit a bit different from some of the other funds where it's not just about the return to the LPs, it's about feeding the funnel for when they want to get involved as a partner or as a later stage investor? So it's more about spotting the true business viability rather than, yeah, we're not sure, but there's going to be a really good exit story. So better, it's all hype, but we can get out and get our money back. I imagine it leads you more to having to find the genuine, like this is actually a good investment, a good solution for the insurance industry, putting aside the dollars for a moment or the euro.
No, obviously financial return is at the core of our job. We are an investor and we owe return to our investors. So that's, I would say, our target, our
So you
goal.
have to, yeah.
Yeah, we need, and that's why we are waking up every morning. But on top of that, I would say we have a financial strategic return on top of that financial return, which is, I would say, an add-on for our investor. And a few of them are investing in Astoria VC because they know that they will get that strategic return. And by the way, that strategic return, I believe, is feeding the financial return, because there are areas where we've been tracking every startup across Europe. And according to us, there is no entry point to invest in such startups. So at the end of the day, they manage to raise money. Sometimes they re-raise and so on. But the truth is that if you look at several areas, there are mainly failures in that space. That's what we see, that's what we get. And then we are very cautious, maybe too cautious on several topics. That's the downside of knowing so much and so very deeply the industry. But I believe that on the other hand, and our portfolio is a good example there, we have first a very good upfront rate, which is among the best in seed funds right now. And most of all, we have no bankruptcy in our portfolio. And I believe it's related to a strategic angle, because we, as long as we spot an area which is too challenging based on the track record, obviously the track record says nothing about the future, but anyway, on several verticals, several parts of the value chain, maybe the market is not mature enough, or we've learned a lot from approaches and we see what should be the right path, and we don't see this kind of offer on the ground, hence we don't invest. So I really believe that financial return and strategic return are tightly related to each other. And I believe that they make the success that we have so far with Astoria VC.
So your focus is European. Does that mean the company has to be based in Europe, or that's the market that they're serving, regardless of where they're based? How does the geography come into play?
Yeah, so definitely European headquartered. That include the UK, European Union, obviously, Switzerland, the Nordics, Eastern countries as well. But there is a reason behind this, is that my partner is from Poland, so he has deep roots in CEE market. I've been working in Western Europe since inception. Long story short, our network are very complementary to each other, but they are European. Again, back to what I mentioned earlier, at seed stage, it's not only about money, it's about how you could structure and help or support the company in which you have invested. And I would say, due to our enterprise software B2B focus, one of the key tools that we offer to our portfolio is to accelerate the sales process. Because we are engaging on a regular basis with a lot of insurance companies across Europe. And basically we know who is looking for what, who has money, who has the team, who has the track record in working well with startups. Long story short, on any market, on any product, we can name not 100 players that you should engage with, but maybe 1, 2, 5 maximum players that will be among your first customers. And that's basically what we invest for, to sign the first customer alongside entrepreneurs. And we can do it because we have a very qualified network in Europe only. Outside of Europe, there are plenty of funds that are more relevant to us than us.
I do appreciate the focus of adding real value and not just adding cash. That's having been at a company that was just at Series A when I joined, but I've been involved since pre-A, since the seed round. It's really critical. Those first few customers are, I mean, that's what defines your chance of the future or not, whether you get help with that. What about in functionally? So you said B2B. Is there lines of business, P&C versus life? How do you think about which parts of the market, again, do we have the right network to be able to support and expertise to understand?
Yeah, so first we try to invest in any business line, and we will soon announce a new round in Spain, which will make us tick the last business line that we haven't ticked yet.
Okay,
So
so
we
we'll
are
watch for that.
What? Sorry.
We'll watch for that. We'll see which one
Yeah,
it is.
yeah, it will be. It should be announced in early November, I believe, mid-November maximum. But then we will cover all the verticals. In terms, I mentioned B2B/enterprise software. It's much more our sweet spot based on our portfolio. So I would say, as a small fund, because we are investing at seed stage, it's really challenging to invest in B2C companies which are burning a lot of money, which require to raise a huge round, meaning that investing at seed stage in such companies, and based on what we see on the market for 10 years, sometimes it looks like gambling. So if you don't manage to raise the next round, that's an issue for your company, and we don't want to enter that game. Hence, we tend to invest more in B2B startup, where, by the way, we can leverage our network. And where we have a competitive edge against any other investor on the ground, because we know well the industry, we know well the players, and I believe that we can accelerate the sales process for our portfolio companies. So that drives us towards B2B. And by the way, there is something that we like a lot beyond the usual and the actual business line, which are around new risks, because we believe that their incumbents don't have a competitive edge because there is no historical data or limited historical data, limited claim data, and so on. Long story short, startup and corporates are equal in that game. And we believe that when you are equal in that game, and when it comes to leveraging new data sets, adjacent data, building algorithm, startups are more relevant than corporates. But it's not corporate against a startup. It's InsurTech enabling corporates to work new risks.
So how do you sort of suss out between in those greener spaces with something new, the TAM might be smaller. So how do you sort of vet whether, okay, this may not be as big of an idea, but we think it has a better chance of winning versus, and this is sort of something we've talked about in the US, is like the next generation of InsurTechs, they go in wanting to be unicorns. So they go in with much larger TAMs rather than, you know, some pocket of the market or something new that we don't really know, you know, what's the total size. How are you balancing that? Because I definitely take it as levels of playing field. You know, you don't have the same level of competition. You come in with a lot of advantages rather than a lack of assets. So how do you think about that?
Yeah, so first, I believe that indeed there is less competition, and that's a huge opportunity for InsurTech themselves. Again, as we are investing at seed stage, we don't plan to have a unicorn tomorrow morning. We are building step by step the companies, and maybe we will exit the companies before they become unicorn. So it's not exactly the same when investing in Series A, Series B, where you need to have that growth and so on. On our side, it's much more first anticipating trends, and most of all, spotting needs on the market. And when I talk about new risks, it's not only theoretical, thinking about, okay, that's shiny to talk about whether parametric insurance or cyber risks or IT-based downtime. No, it's because there is a real pain point on the market in the customer perspective. And then we need to have an offer, an insurance offer. And to make it happen, you need technology, you need data, you need algorithms. And that's what we are looking for when we invest in such companies. First, we spot a need on the market, and then we try to find the best team to address it thanks to technology. So here, technology is obviously just a means, but it's very important because this is an edge compared to incumbents. And then we try to sell this technology to incumbents. And we see this more and more, where you have pure InsurTech players which are working with insurance company or reinsurance companies around the several risks I mentioned. I have in mind Descartes underwriting or Wetterheld around weather parametric insurance in Europe. I have in mind, obviously, envelope risks that recently raised a huge round around cyber security. I believe it's a hot topic in the US as well, by the way.
Yeah.
And IT-based downtime, I believe that we all experience a downtime a few days ago with Facebook and Instagram. Beyond our personal pain point, which is to be discussed, it was a huge pain point for corporates or for SMEs, which are heavily relying on advertising online. So a few of them didn't manage to work in the evening because the downtimes happen in the evening in France. But a lot of them had no revenues during the evenings due to that IT issue. So I believe it's a surging issue. We could talk about freelancer, new way of working, data privacy. So there is a lot of them.
I'm curious about some of the trends that you're seeing, and you mentioned your algorithm. You do put out quite a bit about what you're seeing going on in the market and who's popping. And I'm curious about themes, what sorts of things, but also geographies. Where are these things being developed? I think in the US, we get so focused on what's going on within our borders and our market. And there's some very interesting things that I've gotten to peek into in different parts of Europe, but you're living it. So I'd love to hear from you. Where are things happening and what is it that seems to be trending?
Yeah, that's very interesting. And by the way, this kind of US-Europe difference or cross-border discussion is very interesting because that's what we see with a few insurance company or investor in the US which are considering investing in astorya.vc for that specific reason.
Yeah.
Think, okay, we want to cover Europe as well, or we want to anticipate or get new ideas from the European market, but we need somebody on the ground. That's what we offer. So that's the first, and I would say the first kind of trend is InsurTech startup replicating what they have seen on the US market.
Sure.
It's obvious. It's not necessarily only in InsurTech. It happens a lot. That's the first trend. The second trend is obviously the three major markets in Europe are, with no surprise, France, Germany, and most of all the UK, which is very active. Most of the US investors have a foot in the UK market, plus the fintech scene has long been very active over there.
Yeah, it's quite strong.
So it makes sense. There are a lot of deals over there. But in Germany, there are a lot of things interesting, and in France as well. I would say it's not necessarily the same. If I had to spot trends, I would say in France you have a lot of tech enabler, so B2B / enterprise software like Shift technology around fraud detection, Zeros around AI for insurance companies. So there are plenty of these guys. In the UK, I would say it's rather around commercial lines, maybe due to the Lloyd's, which gives capacity very early. So you have Zigo, for instance. You have plenty of InsurTech towards SMEs that started there 2 or 3 years before everywhere across Europe.
Yeah.
And in Germany, it's much more health, I would say, that I would highlight with Autonova, for instance. So that's quite interesting. And obviously, in all of these big countries, you find again B2C trends with Luco in France, bought by many in the UK, GetSafe in Germany. So you have similar trends, but if I had to spot a very specific areas where one country is stronger than the other one, it's the one I listed before. And the third trend in terms of what's happening is that we realize that more and more in adjacent European countries, there is not only copycats. Obviously, we have copycats, so we have, I would say, a track table like in almost every country. for computer vision for claim management, for instance. But what we see is that in Southern Europe, the market are big enough to attract entrepreneurs that are entering the insurance market, plus the market are very specific. And again, they are big enough to justify to have leaders in their country and significant startup for VC to invest in that areas. And in Eastern Europe, I would say it's much more around technology. You have very strong tech people there. It's not just a cliche to say that. That's what we see. So that's, by the way, something we try to do to tech very interesting tech people from several maybe small market that need to scale very quickly outside of their domestic market, which is not necessarily the case when you are working in Germany, for instance. The market is big enough to stay years in that market only and make your job well in that market. If you are in Estonia, obviously you need to scale at one point. Or Luxembourg or Netherlands, these countries need to scale. So that's the three ways: copycat of the US, big trends, as I mentioned, in big countries. And then I would highlight not only copycat, but very strong teams that you can spot outside of the very big markets, because there are InsurTech everywhere across Europe.
Is it too soon to see, for some of the larger, more established InsurTechs, for their employees to be leaving and starting the next generation? Something obviously you've seen for decades in Silicon Valley. You see a bit of that around places like Root in Columbus, Ohio. There's a lot of Root alumni or Bold Penguin alumni there who go off and start something. Are there pockets of that happening, or is it too early?
I would say we are still looking for a wave of M&A or huge exits in that space, because a lot of money have been invested in InsurTech. We have unicorns right now since the beginning of the year, 7 of them, and counting. But still, we miss, I believe, a few exits like you had in the US with Lemonade, Root, Metro Miles, and so on. But beyond that, we start seeing a huge impact on the market. And the two trends I will mention are, first, the figures that several InsurTech players, especially the B2C one, have achieved. The one I have in mind is on the French market. The tier 1 InsurTech last year acquired as many new customers as the tier 1 mutuals in France. So the usual thing that we hear from corporates, InsurTech doesn't work, it's not true. They are equal right now. And I guess that this year they will be above this tier 1 mutual. So that's something that says something about their capacity to build a growth engine. That's the first trend. The second trend, which I, by the way, I'm quite excited about, is how InsurTech is unbundling the value chain, and especially the relationship between reinsurance company and insurance companies. Because I remember, and I published that on my social network recently, but in 2016, I had a slide saying, okay, be careful, insurance companies. You might be threatened one day by a reinsurance company that will work directly with InsurTech MGA.
Yeah, absolutely.
It was a slide, very nice, fine. Very recently at ITC 2021, a fund shared that basically they consider that $1.5 billion of InsurTech capacity is provided directly from reinsurance companies. So obviously, if you take the US insurance market, it's 1.5 billion is nothing. But if you take 5 years ago, it's a huge growth, and we obviously expect it to keep growing. By the way, we've seen Swiss Re launching iptiQ in embedded insurance. We see SCOR and Munich Re launching their second corporate VC arm. We see in France Covea, a French insurer, trying to acquire a reinsurance company for not ages, but for months. So long story short, it's happening. And I believe it's very exciting because you can either consider it at very small, or obviously, as an entrepreneur, you can believe that it's growing very fast from 0 to 1.5 billion in the US. That's huge. And that's a consequence, I believe, of InsurTech innovation.
I think the reinsurance angle is really interesting. And I agree with you. I mean, I think if people aren't thinking about what reinsurers could do, not just in InsurTech, but you start to think about other spaces. So as I've been talking a lot about the motor insurance market, the auto market, and I was reading something from General Motors today about how they'll be embedding, starting with the Cadillac Lyric, which is starting deliveries next year. They'll have their OnStar insurance embedded into it, and it'll be a monthly subscription. They also talked about doubling their revenue by 2030, largely off of subscription revenue. So of course, to me, it's a no-brainer. Insurance is going to be one of those boxes you tick in the menu that, you know, comes with your data plan and all the other things they're trying to sell you. I don't think GM quite has the balance sheet to do that. Most auto manufacturers, too much of their capital is tied up in their manufacturing and investing in batteries and whatnot. But reinsurers certainly do. And if the automaker has all of the front end and the data and everything to do the underwriting, they just need capacity. Do they have to offer some off-the-shelf insurers motor product, or can they just get the capacity lined up and find a solution for claims handling, which, by the way, comes to physical damage, they already have that. They have the body shops, they have the repair network, they have the parts supply. So to me, it's like, yes, on the InsurTech side, but even perhaps fundamentally shifting a lot of that just front level consumer core product, and reinsurers are really well positioned to do that.
Yeah, and especially around what we discussed earlier with the new risks, because it's all about data, and reinsurers are very strong in managing data and gathering data and managing data. So I really believe that the short-term future will be very exciting about that relationship. And yes, we believe that there will be more and more challenges here. Plus, there is a trend that we didn't mention, but the truth is that if you have a look at InsurTech player, usually they start as an MGA.
Yeah.
And at one point they become a full stack player. So obviously, as soon as they are a full stack player, they by design are directly connected to reinsurance companies. So I really believe that here there is something to be that will have or that could have a dramatic impact on the insurance industry as a whole.
Yeah. Yeah. And as the reinsurers, many of them have their own fronting carrier solutions, or they can spin one up relatively quickly. So they get to stay relevant at each stage of that journey, from digital agent to MGA to full stack, and serve. And there's some actually that have started up specifically with that whole model baked in, as they can do the fronting and all the support that's needed there, and then just pull away when the full stack carrier is ready to go. Yes, it's going to be interesting to see. Are there other, as we sort of think out beyond the 3 or 5 year mark, thinking maybe in the 2030s, are there other kinds of dynamic shifts that you're thinking about right now? Is that too far out to bother with? What are you thinking? And, not the immediate term, but things we certainly need to be planting seeds for today, but that may not materialize yet.
Yeah, there is one point that we didn't discuss yet, which is around the distribution. Because I believe that since inception, we mentioned that the brokers will be bypassed by direct distribution. I believe that nobody believes in it right now, meaning that we will not shift from 100% a few years ago to 0% in 20 or 30 years from now. But the truth is that on several business lines, on several customer segments, it will happen at a huge scale. And here, in terms of proxy, what we usually use as a KPI is the share of e-commerce compared to the retail market as a whole. And due to the pandemic, on several lines of product, it even jumped to over 50%. So I'm not saying that 50% of insurance distribution will switch from offline to online, but that's not impossible. And I believe that between 0% yesterday and 50% one day, there is a lot of room. Obviously, if you're a leading player in that space, you can consider that 10%, 20% is nothing. But if you have a look at your revenues, can you survive if you lose 20% of your revenues?
Yeah.
And obviously it will have a dramatic impact on brokers. So I believe that's a huge trend that will we will see again a shift from pure offline to a mix of offline and online. At which percentage, I really don't know, but I believe it makes sense to think that between 10 and maybe 50% could switch from offline to online, and it will have a huge impact on, again, the value chain as a whole, on several players like brokers. But I'm not saying that they will disappear. I'm
Yeah.
saying that embracing technology, they could stay relevant. And that's what I believe is the challenge for the insurance industry. And that's, by the way, the punchline that we had for Astoria VC1 at the very beginning. We are investing in tech startup to build the next insurance generation. And right now, the discussion that we have around direct distribution or embedded insurance, it's all about embracing technology to stay relevant, to stay in the game. And that's related to the discussion we had with the reinsurance/insurance relationship. I believe that there is the same kind of discussion with brokers. They should stay involved in the loop, but they will stay in the loop only if they embrace technology.
Yeah. Yeah. The notion that anyone will continue on exactly as they have been before, and it doesn't mean you go away, but you will change. And for anyone who pushes back, I just say, do you work exactly the same way as you did? I used to say 10 years ago, but now I can say 2 years ago.
Yeah, that's the point.
Things
And
change.
for everything, we have all changed our habits. And by the way, unfortunately, during the lockdown period last year, the insurance company, broker networks realized that actually having this network of brick and mortar shops was useless in a closed world. So
Yeah.
I'm not saying that we will stay close again and again, but that's a truth, that's a reality.
Yeah.
And I believe, and that's an opportunity as an investor and as an entrepreneur on the ground, they have realized, thanks to that period or due to that period, that they had to embrace technology. And again, it's not InsurTech against insurance companies.
Yeah.
It's InsurTech enabling insurers. So it will have an impact for sure. But again, we are not saying that we will switch from 100% offline to 0% offline. That's not the case. On several business lines, it will remain mainly offline.
Yeah.
On several others or on several customer segments, it might become majority online.
Right. Right. Yeah. I mean, I always say disruption is just opportunity if you navigate it. If you sit back and say, no, it's not going to happen, then it will disrupt you. But you can engage in it, embrace changes, technology, et cetera, and be there for it and help define where it gets to go. Yeah, that's with any change, not just in our industry, but certainly we're known for having a tougher go of it, but we have to. And I think actually the past 18, 20 months, whatever, was a bit of a wake-up call that we can do that, because those who didn't make any changes whatsoever probably aren't in business anymore or are dramatically less relevant than they used to be. And most people did make some change. I mean, meetings like this and whatnot. I talked to a life insurer in August of 2020 who still hadn't changed anything in their process. And so they had 0 new business produced since March. They had all these policies waiting for medicals, and they were, just sort of saying, well, we're just waiting for everything to open up again. It's like, why? All of your competitors have had record new business years because there's this surge of interest, and you're just stuck, and you're going to tell your shareholders new business was 0 for the past, however many months. That it blew my mind that they were even that was their strategy.
Yeah, but I believe it's related to the very specific way the insurance market is structured, because that's a stock business. And I'm pretty sure that the insurance you mentioned, or the insurance player that you mentioned, makes money anyway in 2020 and makes money anyway in 2021. The truth is that by design, the stock decrease, because at the end of the day, people are dying. So by design, the stock will decrease. So there is a need for growth. You need to attract new customers. So that's something that we hear sometimes saying, and that's a few corporates that are trying sometimes to compare their stock to the flow of new customers from an InsurTech companies.
Yeah.
It doesn't make sense, because at the end of the day, I agree it's a matter of stock, but again, the stock will decrease if you don't get new customers. So you need to acquire new customers. Let's compare what is comparable. So I believe it's a very short-term thinking to rely only on the stock, because again, if you don't attract new customers in a few days from now, your business will be worth nothing. And by the way, that's what I believe is driving the M&A wave that we see, especially here in France. We see a lot of mutual in health, for instance, acquiring each other, building groups of players. You can see an M&A as a positive thing, which is a way to accelerate, to get a new business line, but you also can see it as let's say, a threat, because at the end of the day, usually a brand disappears in the game. So I'm not saying that they are dying, but in a sense, at least the brand disappear, and obviously it's a way to, when you don't manage to acquire enough customer yourself, you acquire the portfolio of somebody else. So I really believe that people, at least here in Europe and specifically in France, get that threat that obviously they need to attract new customers to keep a significant stock.
Yeah. Florian, really great perspective, and to hear from someone who's on the ground, not just in Europe, but in those earlier stages where a lot of the investor activity is not focused. So hearing sort of what's bubbling up, what will be coming next, was really valuable for me. Thank you so much for spending some time joining me for the show.
Thanks a lot for the discussion, and really enjoyed the discussion we had around insurance. So looking forward for the next one.
Yeah. Thanks, Florian. Thank you so much to Florian for joining me for the conversation. It is really interesting when you start to look at the funding gap and how so much of the VC community, different kinds of VCs, different kinds of investors, are focused on things that are more proven. Totally makes sense. I totally understand that. That's more what they're built for. But we do have a need to support the early stages, so we have those later stage companies to fund. And it's really hard. It's not just about money there. There's a conversation that comes up with so many of the great VCs that I've talked to. It's a conversation we'll have multiple times with VCs in this season, because I've already had those conversations. I'm excited to bring them out to you, but Florian's absolutely right. It's about, how do you spot the flow? How do you see what's out there? And yes, they have some technology, some intelligence that they built to do that, but they've also positioned themselves at Astoria really well as the place you turn to in the European market to get that early stage support, and not just money, but incubation kind of support, acceleration kind of support, mentorship, advice, strategic advice and guidance. That is actually so much more important than the check you write. Yeah, the check's necessary. You got to keep the lights on, but money is not good enough for an early stage company. And so the investors who will do that right are a different breed with a different purpose, different structure, like Astoria. So kudos to Florian and the whole team for what they're building. It's really important. If we want to keep moving the industry forward, we need some of these fresh ideas to get incubated, to get built up, to get funded and supported in their early days. So I'm very excited to see the kinds of things that Astoria is supporting, because I think it tells what the future will look like for our industry and how things will shift, certainly in the European market. I should also add, Florian is one of those people, when people are like, how do I learn what's going on in the space? Who should I follow? Florian's one of like 4 or 5 names that I always mention. You really should follow him on LinkedIn if you don't already. He posts pretty regularly with the kinds of things that Astoria is seeing. So you'll learn about some of the InsurTechs that are brewing, some of the next things that are going on. You can learn about some of the ones who are more established and the trends and the way things are playing out. But he puts that stuff out regularly, really openly. It's a great follow. So if you don't follow Florian on LinkedIn, you absolutely should. With that, I will say thank you to Florian and to astorya.vc. Thank you to Insure National for sponsoring this episode. And thank you to all of you for tuning in, listening, however you're taking this in. It means a lot to me. Please do share the show, rate, review, give it a thumbs up, a like, whatever, the positive vibes you can send. and spreading the word. It's critical. And that's what helps allow me to have more great conversations like this that I hope all of you value. So with that, I will say goodbye, and I will see you next time for another episode of The Future of Insurance. Thanks, everyone.